and welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Thursday, January 24th, 2013. Well, a continuation of the trend to the upside today. The candle has made a higher high and a slightly lower low, so an outside day in bar chart terms. Certainly an indecisive day because of that. And even though we have had the seller strong enough to take out the previous low, only very slightly over, we still do have an uptrend in place. Now, certainly a good opportunity for a change of trend here. Probability is strong that there will be a change of trend. Previously, I highlighted the market attempting to trade out above this zone of resistance around this 1475 level. If we had strong bullish activity, there was a strong possibility the market would trade to around the round number resistance at 1500, and that's exactly what we've seen today. The market has tested just above there and been rejected from there. Now, if we look at the development of this first time frame uptrend, look at the size of the body of the candles as they've been decreasing, and now we have a doji candle, no body. And it actually says something about how, as this trend developed, the buyers were continually losing momentum. And this has led us to a state in the market where there is potential for a change of trend to the downside. The very small body, or basically no body, to this candle means that neither side, neither the bulls nor the bears, have made any bullish nor bearish net progress. And the significant thing is that previously the buyers were making bullish progress, and now they've basically made none. So we are primed for a change of trend back to the downside. But by the same token, no strength from the sellers. Now we have the market open and closed within the middle of the range, and that means that neither side has control of this market, whereas previously in the past four candles the buyers always took control by the end of the trading day, and that's significant now, a loss of control. So there is good potential for a change of trend. Obviously the market has tested just above the 1500 round number level of resistance, and that is a very important level, and that does also suggest, with this indecisive doji type candle and being strongly rejected from that area, that there is a potential for a change of trend. So we do need to watch that low of the current candle for a potential lower high and lower low. Now, because this uptrend that the market's been in this short-term time frame has been so strong, the first level that we should be looking for support is at the Tenkan-sen, the green line here, and that's at 1483. And I suggest that this market will find support around that level, perhaps bounce off there and test the 1500 area again if we do see that change of trend to the downside. There's no guarantee that there will be a change of trend. Now, if the market does trade lower, however, down through that level, then we do have potentially strong support at this previous resistance zone in the past week, around the 1475 down to roughly 1470 area, and down below there at the basically about 1457, 1456. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame uptrend to the previous time the market's trending up, and here again for the second day we've seen rejection from the 161.8% level. The market has tested up above there, it's a significant level, and very strong rejection, and it does suggest that there is potential for a change of trend. So let's look for a lower high and a lower low. And as we've seen the Fibonacci retracement, we're in an expansion mode of that. We've traded through the 100% level in a very strongly bullish manner, tested to the 423.6% level today, just above there. The 1423.6 level was 1501.84. We traded to 1502, and now we're seeing this indecisiveness, and we certainly are set up for a change of trend here. Now, in terms of Ichimoku, a bullish market in all three time frames. The market's trading above the cloud, so we're bullish in the long-term time frame, bullish in the medium-term time frame by trading above the Kijun-sen, the pink line, and also in the short-term time frame by trading above the Tenkan-sen. So we also have the Chikou span here above the corresponding price action, so it's confirming this bullishness that we're seeing. So it's likely that now looking at this market is looking a little bit overextended. We are trading a long way away from the cloud and a decent way away from the Kijun-sen, the pink line here, and these indicators are represent equilibrium in their various time frames, and markets tend to move away from equilibrium and back to it, and there is a very strong probability of the market moving back towards equilibrium. So we are a setup for that change of trend. But as I've mentioned, potential support at the Tenkan-sen, and then further down below these dotted highlighted lines of previous support and resistance areas, and then certainly down to the Kijun-sen around this 1450 level, coincides with this swing high and a form of tweezers top, and that will be very, very strong support if the market trades down there. But I doubt that it will trade down there in a hurry. I suspect that if we do come off, we will very quickly find support and then perhaps test up to around the 1500 level again. And if the market can find its bullish momentum again, trading through the 1500 round number level of resistance, then there is a good possibility that we could end up trading up to 1523.